Welcome, dear traders. You are watching a recap of the Asian session. It's no secret that trading sentiment in Asian stock markets depend on the results of a Wall Street trading in the day before. The main US indexes closed today as well as on Tuesday with gains. It facilitated the growth of Asian stocks on Wednesday, and they have been rising for their fourth session in a row. What's stirred optimism in the stock market? How long will it last? And watch our video review and find out. Despite the current euphoria, the long-term outlook remains pessimistic. Countries around the world are facing the risk of a high inflation, so they have to adhere to a hawkish monetary policy. Apart from that, the geopolitical woes caused by the crisis in Ukraine may also adversely affect the global economy in the near future. However, on Tuesday, investors shrugged off these fears, pushing the main stock indexes higher. As the result, they managed to start a rally led by the NASDAQ. Optimism returned to the equity market after the release of strong reports on retail sales and industrial production in the United States. Retail sales increased by 0.9% in April, while industrial production accelerated to 1.1% from 0.9%. Such indicators signal economic expansion rather than a recession. Traders definitely thought likewise and welcomed this data. Risk appetite climbed immediately. As a result, shares of Apple, Tesla, Amazon and Microsoft recovered after the recent drop. The NASDAQ and the S&P 500 indexes advanced by 2%. By looking at this small list of companies, we can see how the US market is volatile. However, its volatility has been rather high since the beginning of 2022. For about 39 times, the S&P 500 index has lost or gained 2% or more. In 2021, the number of fluctuations did not exceed 24 times. While risk appetite is high in the stock markets, traders are getting rid of government bonds. The US dollar halted its steady rise, trading flat. Yesterday, it declined against almost all rivals due to a rally on Wall Street. It rolled back even further from a 20-year high. However, its weakness was short-lived. Yesterday, speaking at the Wall Street Journal's event, Jerome Powell said the Fed would continue tightening monetary policy until it sees clear and convincing evidence that inflation is coming back towards the target level. The US dollar index erased half of its losses amid such positive comments. In the Asian session, it was trading at 103.69 versus its counterparts. The greenback seems to have stopped the three-day decline and gained momentum. It was moving in the range of 103.19 and 103.77. How did the yen react to a rise in the US dollar? At yesterday's close, the dollar-yen pair rose by 0.2% to 129.37. At the same time, the yen also weakened as the traders revised their portfolios in favor of risk assets. However, today, risk appetite is declining. The US dollar is also losing momentum against the yen. At the time of preparing material for this video, the pair tumbled to 129.21. and consolidating in the range of 128.92 and 129.53. As a reminder, the pair has been hovering in the range of 127 and 131 for about a month. The psychologically important level of 130, which analysts discussed a lot earlier, has already been broken. So now the new critical level is 135. In the case of further growth, the pair is likely to test the peaks of early 2002, which are located in the resistance zone of 135.01 and 135.16. Given that Japan's GDP is shrinking, imports and commodity prices are soaring, and the producer price index is at the lowest level since February 2021, the weak yen is causing more and more damage to businesses. Nevertheless, Japan has seen an increase in industrial production for the second month in a row. If the US dollar index loses ground and there are signs of recession in the United States, the yen is highly likely to strengthen and take the lead versus the US currency. The Aussie also flexed muscles against the greenback. It rose by 0.7% to 0.7015 after the release of the Reserve Bank of Australia meeting minutes this morning. The regulator hinted at a larger rate hike of 40 basis points if necessary. However, Jerome Powell made even more hawkish statements, signaling more rate increases. In addition, the Aussie dipped following weak wages data in Australia and falling oil prices. Last but not least, commodity prices are growing as well as stocks. In today's Asian session, the Aussie slipped to the range of 0.6996 and 0.7047 amid the consolidation of the US dollar. At the time of preparing material for this video, the pair maintained a downward movement, trading at the level of 0.7006. And that's all for now. Subscribe to InstaForex TV channel and keep your finger on the pulse. Don't hesitate to leave your comments down below. See you soon.